Yeah, I want to welcome everybody today. My name is Pete Upton, and I'm the Interim Executive Director of the Native CDFI Network. And today's topic is one that we've had a lot of requests for, and especially in the Native community. And the title of our webinar today is Building a Community Starts at Home. And that's so true. The caption here, you can help expand successful home ownership for your reservation and create new construction on tribal trust land by using the Section 502 USDA Single Family Housing Guaranteed Loan Program. A couple months ago, I was on a webinar and David made his presentation, and it was one of the better presentations that I've seen in regards to the 502 program. And the USDA Rural Development Program is an existing program that provides 100% financing for eligible borrowers in rural areas and utilizes generous underwriting criteria. The USDA staff in this webinar is going to provide essential information about the program, as well as an explanation of how CDFIs can qualify to begin utilizing the program now and helping applicants obtain housing on trust land. So our presenter today is David Corwin. He is the Deputy Director of Lending and Partner Activities for the USDA Rural Development Single Family Guaranteed Program. And David, I'm going to turn it over to you because I want the audience to really capture your slide presentation that you gave a couple months ago. It was outstanding, and like I said, it was one of the better ones that I've seen, and it just thoroughly explains the flexibility of the program. And in the underwriting criteria, I was surprised at some of the components that were as flexible as they were. So I'd like to turn it over to you now, and afterwards we'll have some questions for you.
All right, great. Thank you very much, Pete. Kind introduction, and I'm glad you enjoyed the show because now you get to sit through it again. Let me pull it up here for everybody and we'll dive right in. It's not a very long presentation, so there's gonna be plenty of time for questions afterward, and we're happy to stay as long as necessary, answer all of your questions. So the Single Family Housing Guaranteed Loan Program of the USDA. What is it? Basically, it was designed to provide low and moderate income households the opportunity to get decent, safe, and sanitary dwelling in rural areas. So what we do, we offer the ability to acquire existing, build new, rehabilitate, everything in those areas. And we do that by providing loan guarantees to approved lenders. So you can consider it very similar to FHA or VA program. Now, what the program offers as far as potential clients are concerned, the main thing, which Pete already alluded to, is 100% financing. So no down payment, 100% financing, and of the appraised value. So unlike a lot of other programs, not just based on sales price, if the home appraises for more than the sales price, that's extra room they have. They can roll in closing costs, maybe some repairs, whatever. We'll go to all the way up to the appraised value, regardless of the sale price. We allow alternative credit. So those who don't have established traditional credit, we do allow alternative credit sources, things like, electric bills, gas bills, phone bills, things like that, things that wouldn't normally report on credit, to establish someone's ability and willingness to repay loans. There's no asset or reserve requirements. There's no cap on the purchase price. And the way we do that, of course, there is an implied purchase price cap in that. There are, of course, income restrictions for the program, and that, along with debt ratios, would create a cap, but we don't have a listed cap when someone goes shopping. It's whatever they can afford. Low fees, 1% upfront financing fee, and that can be rolled into the loan. So really, it's 101% financing of the appraised value, because the borrower can roll in that 1%. And then it's a 0.35 annual, one of the lowest as far as, I think it might be the lowest as far as annual fees for 100% financing. There's no rate restrictions. That's all up to market forces. No CLTV limits. So what that is, combined loan to value. So as long as our loan is in the first position, we don't care if there's a second, a third loan, whatever. So where that often comes into play, someone who might get a down payment assistance program, often the silent seconds, things like that. It doesn't have to be silent second. There can be payments on it. Basically, we don't have anything that addresses CLTV, because all we care about, we're in the first position and you don't exceed 101% of the appraisal value. And any of those down payment assistance programs, they could be federal, state, local, anything. We don't limit any of that. Like I said before, it's purchase or new construction. We have construction programs. I'll talk briefly about that in a little bit, and refinance, but refinance is limited to only current USDA borrowers, and that could be through our direct program or this guaranteed program. And as I mentioned, the single close construction, we'll talk about that just a little bit. Not limited to first-time home buyers. That's a common misconception out there for people who don't know the program very well. It's not just for first-time home buyers. And you can actually own one other home, no more than one other home, but you can own one other home as long as that other home is not financed by USDA, our direct program, the guaranteed program, anything, not in any way financed by USDA. And the home they're purchasing now is the one they're going to live in as their primary residence. And there's another criteria too, but it leaves the door wide open. As far as the current home doesn't meet their needs, maybe that's because their job moved, maybe it's too small, whatever, they would stipulate why it doesn't meet their needs anymore. There's no set acreage limits. There was confusion about that when this program used to be run by the states before it turned into one national team running the program. I know there was an issue out there in some states, some confusion about it, but there are no set acreage limits. It just has to be, the lot has to be common for the area. So sometimes out in South Dakota, a 20, 30 acre lot is common for the area. So there's not an acreage limit. Escrow for repairs, as I said before, and we have programs specific for that, or just our regular program. Like I said, if it appraises for a little more than the sales price, whatever that money is, they could use that for some repairs. And we allow seller concessions up to 6%. So the benefit for a lender utilizing this program, as I said before, a 90% loan note guarantee. So it's basically us backing up to 90% of the initial purchase price, of the initial amount financed. Also, you can earn Community Reinvestment Act credits by utilizing this program. And you'll find that our loans are sought after on the securities secondary market due to mainly our low prepayment rate. It's about 7%, which comparative to FHA at 36, VA at 66, there's a very low turnover in prepayment of these loans, which is highly regarded by someone investing in loan packages in the secondary market. So how do we compare to other programs? This is just a basic chart showing the other two government programs, FHA, VA, and then a lot of the other, they're not no money down, but very low money down programs through Fannie and Freddie that are designed, again, to hit those homeowners who just don't have a lot of money down, don't have a lot of income. But comparatively speaking, you'll see we are one of the only two with no down payment, just the VA is the other one. And the overall payment, when you consider the mortgage insurance and some of these others, the money you got to put down, really the only program that would exceed what ours can do is the VA program for veterans with their full eligibility. They'll obviously do better there. Anyone else under the sun, if they can qualify for the USDA program, it's a lower payment and with no money down. So how do you get into how does someone get into the program? Two main criteria. One, of course, we're rural development, so the property has to be located in an eligible rural area. And two, the total household income can't exceed 115% of the median household income, and that's done county by county. So it can't exceed 115% of median household income for the county where they're purchasing the home. Now, as far as those restrictions, it leaves a good amount of the country eligible for the program. If you look at some of the maps, you'd be surprised at some of the areas that are still considered rural under our definition. Our definition gets a little confusing, so I'm not going to get into that today, but you'll see it's over 92% of the US landmass is in an eligible area. And as far as the income, 115% of median household income, that's about 4/5 of the households in the country fall under that. The lowest that cap gets, when you get to some of the most rural counties out there in the middle of the country, it's 92,500 for a 1 to 4 person household. So that's the lowest it gets. So that just helps demonstrate we're not talking about a real strict criteria here of income. It's not a small window of, oh, well, someone needs to be in a real financial situation. No, you're getting into what would normally be considered middle class. Again, 4/5 of the country fitting under that. So to see some of these eligibility criteria, how they spell out for your area, we have a site that has everything on it, both the location and the income. For the location, you can use the map just like a Google map. You can zoom in and out. You can also put in a specific address and it'll pinpoint it, like here on this example, and show you whether it's in an eligible area or not. But of course, when someone's just starting shopping, it's good you can show them the general map and see, okay, well, is there anything that's not eligible in the area they're looking at, so they know where they need to be looking for a home. And the income limits, there's two different things here you can go to as far as income eligibility and income limits. What we highlighted here are the income limits. If you go to this, it'll break it out, the data. So you can look at your state, look by county, and see what is the income limits for the moderate income household. But we also have an income eligibility tool right to the left of that. And what that is, if you have some more specific information about a borrower, you can input it in there and see, does it come out that they would qualify? So as we discussed before about the potential housing, we can do existing, and that's stick built. We consider modular stick built as well. We also do manufactured. Manufactured throughout the country, we do new manufactured units. We do have a pilot program going right now that's incorporates about half the states in the country, where we can do existing manufactured, and now they would have to be on a permanent foundation, and that's the same requirement if you do a new manufactured home. It will have to be placed on a permanent foundation. But with the pilot program, they can do existing that were built January 1st, 2006 or newer. That pilot's been going on for a few years. It may become a rule in the future. We don't know. As right now, though, the pilot has been renewed and it'll be good through November. And you can find on our website the information to see which half of the states are covered in there. It's not like one half of the country or the other. They're spread all around the area. So of course we do new construction too, or to build new. We have a single close construction program that can be done in two ways. We have an interest only and a securitized. So what those are is during construction, either interest only payments are made, or you can have the securitized version, full PITI payments are made during construction. So why we call it the securitizable version is that because full payments are being made right from the get-go and all the way through construction, there is no conversion at the end of construction. The payments are staying the same, which means it can be securitized through Ginnie Mae immediately before anything happens, before a shovel goes in the ground. So both of those options, whether you chose to do the interest only or the PITI, we do allow for the escrowing of those payments. So of course the borrower doesn't have to make anything out of pocket. Those can be rolled into the loan, and that's up to a year. So 12 months of construction period can be rolled into the loan, escrowed into there. And the biggest thing about it is that our loan note guarantee, our backing of this, is right there, right at the beginning from the initial signing, meaning before a shovel goes in the ground, our loan guarantee's on it. So the lender is covered, the borrower is covered, the construction, the builder is covered. Anything were to happen to that borrower, or the borrower just changes their mind and whatever, walks away from the deal, the lender is still covered with loan note guarantee, but the builder's still covered too, because the money's already there. The lender would take over just managing construction, get the house built, sell it, and if they experienced a loss, come to us with a loan note guarantee. So it's great that all parties are covered right from the initial signing with the single close construction loan. And again, that's either version. We know that's pretty important out there too when we're talking about this lending on tribal trust lands. Now with trust lands, our product already allows lending on trust lands. We don't need to make a new program to get this ball rolling. It's been a part of our rules for, I don't know, since we established the rules. So we actually treat trust in our Native American trust land even a little bit better than regular leasehold property. Typically on a leasehold property, we want to see that the leasehold is 15 years beyond the note on the mortgage. For tribal trust land, just got to be equal to. So we make it even a little easier there. And we'll get into near the end of this presentation, we can talk a little bit more about some accommodations we're trying to make sure lending happens on trust lands. Because even though we're allowing it right now, obviously it's not happening. But we'll get to that as well. So we also allow rolling in reasonable customary expenses, your closing costs, things like that we discussed. Rehab and repair, and we can do this with minor rehab repair. You can do that right within our regular loan, but with a more considerable rehabilitation home maybe needs considerable work on it. We work it just like the single close construction, in that, you know, the money is there, the loan note guarantee is there, again, at closing before any construction starts. So again, the lender, everyone is protected. And the refinance, as I mentioned before, just for current USDA borrowers. So other things, so the site, as I said before, there's no acreage limit, just has to be typical for the area. Predominantly residential in use, character, and design. So what that is, we're talking about rural America. Lots of times there's farm buildings out there, there's sheds, there's utility buildings, all sorts of things. And we allow for that as long as the property is predominantly residential in use. So if you have an operational farm, yes, that would not be eligible for this program. But having a barn out back and maybe, you know, raising a few animals, what we'd call a hobby farm, like raising some chickens or goats or something, you know, not an operational farm, and that isn't the source of income for the borrower, then those are acceptable. So it's, that one's a long discussion, and we have a training module really based mostly on that on our website, because that it is a tricky one. There is a line, you know, fine line there. What do you consider? But that gets you the general idea, as long as it was generally designed for living in, not for making money. We do have an automated underwriting system that we call GUS, the Guaranteed Underwriting System. And it just makes things a little easier for you. You, the lender, are still the underwriter. You're underwriting the loan, but you'll input it through the system. And if you get an accept response, you know, okay, well, our computer system agrees with you. That's a good loan. So there's going to be minimal documentation you need to turn in, and minimal review by us, because that is one of the unique things about our program. We still have a review of every single loan that comes through the program. So we have a team of, I couldn't even tell you how many, maybe about 150 people that just review these loans. So you, the lender, you underwrite it, you get it all put together, you put it through the system, you get your response, and then then it automatically turns into us through the system. And then we review it. Typically that's 48 hours or less to come back to you. So again, you get the accept. If you get a refer for caution finding, that doesn't mean it's a bad loan. Just simply, okay, well, there's things about this that just, it triggers you and it triggers us that, hey, let's just look at this a little closer. Doesn't mean it's a bad loan though. So how would you, a CDFI or any lending institution, get approved with us? I'm going to go over, here's the criteria that we have listed in our handbook. We're just going to breeze through this pretty quick. But what I want you to keep in mind is, as we go through this, if you're not seeing anything on here where you would qualify, for the native CDFIs, we are offering flexibility. We want to talk to you. If you want to get signed up for the program and you're not sure you'd qualify, or based on what I'm telling you today, you're pretty sure you wouldn't, don't think that that's the case. We want you to reach out to us. We'll talk with you. We'll see if there's a way we can get you approved. We have some flexibilities here. So the easiest ways to get right in, approval by another recognized source, State Housing Finance Association, HUD, Ginnie Mae, Freddie, VA, Fannie, FHA. So any of the other programs out there, if you're already approved, that's going to get you right in the door. Approval by demonstrated ability. So again, we'd look at things a little closer and see that, okay, well, you have a track record of being able to originate and underwrite and service loans. And you see the history of that, written criteria that outline your policies and procedures, and evidence that you have experienced staff. You can also go through federal oversight if part of the Federal Reserve System, or seen by FDIC, NCUA, the FLHB. So any kind of that oversight, also acceptable. Experience with a USDA program or farm credit system. So any of, our other agency programs, the business programs, utility programs, or even farm credit services, any of those, you'd already be able to come in. So again, those were the primary criteria. That's what's listed in our handbook. But if you don't think you meet any of that and you are interested, again, we're going to have our contact information from the day. We want you to reach out to us, and we want to find a way to get you approved. So this is just to show you just a brief how simple it is. This approval checklist is just giving your basic information along the principal officers and directors. Checklist that walks you through the things to turn in. You're going to check, what things, how is it you qualify based on which of those criteria. And then this just shows you what you're turning in. And really, as far as forms, it's just that first line, the 355516. It's a 4-page document that just requires your signature. Well, requires you reading over it too. Just explains the rules of the program and what's expected of you. And then everything else on there, your resume, servicing, quality control plan, underwriting outline. So those 7 items that you would have to turn in with it. So the other nice thing, we have a lot of nice resources out there for someone looking to be in the program, and of course for all of our approved lenders in the program. We have a link training and resource library, and it's a great access point for everything they need. Any of the forms that we use, we have trainings put on there, and the trainings are broken up by section too. All the different chapters in the handbook. I think we have 19 chapters now in a handbook, and the trainings are broken out individually that way. So you can do just the pieces you want to focus on. Your staff want to brush up on something, they can go just to the thing on ratios or just to the training on credit, whatever. And they're all typically about 10 to 20 minutes long. So we keep them in small pieces so you can get the main information you need in a timely manner, because we know everyone's pretty busy. So, but yeah, this has servicing information on there too, the closing, really everything you need to operate within the program is located in this link library. At the bottom of this link library page, there's also a place where we store all of our GovDelivery updates. So, and we ask that any of our approved lenders and their staffs get signed up to receive those updates. We don't release a lot of them. Typically, it's probably 1 or 2 a month, but it highlights any important changes that we might have to the program, anything underwriters or salespeople would need to know, whether it's coming up or something that already changed. It's just important information. You get those updates. Again, we don't send them all the time. We keep it just to the really important things. So that's a very important thing to get signed up for. Our main web page for lenders, right at the top, it shows where the arrow is, the loan status. That's the biggest thing lenders come to the page for. Again, we've put on this page the link to the library, but also a lot of other forms, useful information on there. But right at the top, we put the status. What that is, remember I mentioned before, we actually look at every single loan. So when you put it through the system and hit final, it clicks over to our side, and if someone reviews it, that person reviews it, provided everything's good, send you back your conditional commitment, which is the document that tells you can go to closing now. This tells you what our turn times are. Remember I said it's usually 48 hours or less. Admittedly, sometimes in the deeper parts of summer where things get really busy, we might get a little bit behind that, and we just keep posted there so you know and you can plan ahead knowing what is our turnaround time. And for contacting the group of people who are looking over these loans are production teams. They're broken up into 4 different divisions and broken out by state. So if you have a loan submitted, you just look at whatever state you're in, and that you have the contact information for that team. So anything you need to contact or communicate about that loan you've submitted, you can talk directly to that team. And I put on here my group's email information, the sfhgld.lenderpartner. While we do oversee marketing and training, you can still use us as the one stop for anything you need. We will get you to the right department. If we're not the one you need to go to, we're happy to work with you. And as I mentioned earlier, if you're a lender interested in getting signed up with us, but you're not sure you qualify, please reach out to either me directly or our group. And yeah, we'll sit down, we'll have a conversation, we'll see how we can get you approved. So I talked really fast there. So now we will open it up and see. I'm looking here at the chat feature. I'm not sure if I'm looking at this right. I don't know if you can see Pete. Am I seeing any questions?
The question that I have for you to maybe lead things off here would be of the like if you had the top 3 challenges that you see when maybe an application is submitted, or I guess the second one would be the trust financing on trust property, what obstacles or what challenges do you see that maybe the one or two top challenges that maybe slow things down?
Sure, sure. When we start with the first one, as far as you know, difficulties, the one thing I should mention, because it is the one thing that's really a little bit confusing about our program that's unique to our program, is that you have two different income calculations. Remember I mentioned earlier that to qualify for the program, the household can't exceed 115% of the median household income. What that means is not just the applicants, it means the household. So even though maybe only the husband or only the wife are going to be on the loan, it's going to include both their incomes to see if they qualify for the program. And that goes any adult in the household. So if there's grandparent living there, friends living there, it really doesn't matter. Just any adults living in the household, their income would count toward that cap, toward that 115% limit. So it's just, that's what's unique about our program and sometimes confusing to lenders is that, okay, well, we got to do this one calculation to see, do they qualify for the program? And then once we find out they do, okay, well, move that calculation aside. Now we're going to calculate repayment income based on who's going to be on the loan. Now that's not the confusing part because that's the way you calculate for any other program out there. So there's just that one unique step there. Now getting to the tribal trust land lending, yeah. So as I mentioned, our program allows for lending on tribal trust land. There's no hoops to jump through or anything, and yet it doesn't happen. So we started really looking into this several months ago, the end of last year, trying to see why that is and what we can do to help that. One of the biggest things we found is that the lenders are hesitant to do it, even though we allow it, even though our loan note guarantees on it, because if it goes into foreclosure, it's default. It's a lot more complex because now you have a second court system to deal with, and foreclosures are already difficult enough to deal with. So we are looking at for approved lenders the potential of using MOUs, memorandums of understanding. We've drawn up one in pencil. It's an idea, one that could be worked with. So one, we could sit down with a lender and with an interested tribe and see if we can't work out the roles for everybody. But what the form does is predefines everyone's role in case of a foreclosure. So for the lender, their coverage would be, okay, if this goes to foreclosure, I'm going to have to notify the tribe, and whether they set up, okay, they have to notify them if someone's 60 days late, give them kind of pre-forewarning that, hey, it looks like this might be coming or something. I don't know. Or just when they're actually going to start into foreclosure process. But they would notify the tribe, okay, go into foreclosure. The tribe would then maybe have a period where they could try to resell to another tribe member before taking the property back, but otherwise at that time or a short time after, the tribe would purchase the property back at a discounted value. And this is something that would be worked out at the table, a favorable net recovery value. So it would help ensure that the tribe gets it at enough of a deal that they wouldn't have any problem then reselling back to a tribe member and getting their money back, if not potentially making some money on it as well. And for the lender, again, hey, that's your foreclosure process, is turning it over to the tribe. They purchase it from you. Yes, it's going to be at a favorable value, meaning there will be some loss, but that's why you have your loan note guarantee. Now you come to USDA to get paid on your loss. So that's kind of a very high level. That's the essence of what we're looking at doing there with the MOUs to encourage lending to happen.
And we do have another question there for you, and it comes from Becky Albert Breed. What criteria are you looking for with CDFIs to be considered for the program? More specifically, what certain credentials?
I mean, really, the hard part around as flexible as we are willing to be and want to get CDFI, any interested CDFI, these native CDFIs, we want to get you approved. So we're going to do what we can. Hopefully, though, you would have at least some history of housing lending. I'd have to say, I'm not saying no to anything, as it would be difficult if you don't have any history of doing mortgage lending. That's definitely going to make things a little more difficult. If you do have a history, I really think we would be able to work that out regardless of anything else.
And approving a native CDFI, this question I just thought of, is there like a minimum asset base that a native CDFI would have to have in order to be considered?
We do have criteria. Joaquin might need to help me here. I don't think it's out yet. There's criteria that's been listed. It's coming out, and there are going to define some of these financial holdings or the characteristics of assets for an approved lender. But again, that is an area too that we can be flexible on for native CDFIs.
Okay. And does a native CDFI, do they have to have a educational curriculum for home education to be approved?
Do they have to? No, we don't have a home education requirement for our program. It's encouraged,
Okay.
but and know that we are willing to participate as well. I know back when I worked in Montana, I did for a couple of the tribes there. I'd go to their home buyer education programs and speak about USDA and help in general. So yeah, we are still willing to do that to the best we can. Admittedly, there are a lot of tribes out there, and I suppose if we got hit up by all 574 of them, we might have struggled a little, but I don't imagine that's the case. So I think we'll be able to help you out there. And
Okay.
that's a nice thing too. I didn't mention with our agency, we are small still, comparatively speaking, and just in general, we're not that big an agency. So the benefit there is you get that personal touch. After this call, you want to reach out and work with us, you're going to get real people. You're going to get myself, my team, Joaquin. You're going to get to work with us, and that doesn't go away once you're signed up with us either. All of our lenders have the ability to reach whatever department and reach live people at any time.
Artis, do you want to jump on and ask your question directly?
Yeah, that'd be great.
Okay.
Hi, David. Thank you so much for this presentation. We have a number of people who are interested in our service area and doing new builds. And I'm curious, do you guys have a maximum loan amount that is offered underneath for new construction?
No, there is no maximum loan amount for any part of our program. But like I said, the cap kind of gets set by what someone can afford. So there is essentially a cap. No one's going to buy $1 million home because, again, you can't exceed the 115% of median household income. And of course, we have debt ratios like any program. Our main debt ratios are 29-41. However, when you go through GUS, it does have expanded debt ratio acceptance. They can accept considerably higher depending on someone's situation. So that right there, between the income limit and the debt ratio limit, you do essentially kind of have a cap. But no, once you get someone approved, whatever they can afford, there you go.
Perfect. Thank you.
Sure.
And Barbara, do you want to jump on and ask David your question directly?
Sure. It's a little off topic for the CDFIs, David, so I'm not asking for you to go into any details at all, but we are, I'm working with the Rosebud Sioux Tribe and their economic development arm on a development that's going to include housing. And so we're looking at the whole range of lending opportunities for potential buyers. And I'm just curious, are you personally also involved in the direct loan program, or is that a different arm of the single family housing USDA?
No, it is a different arm.
Okay, that's cool.
But if you had some, I know stuff about, I used to be the director in Pennsylvania, so I do know stuff about it if you had general questions about it. But if you're looking at, working with the program, you would work in that state. That is not nationalized like our guarantee program.
Right.
That is still run state to state. So you would reach out to that state office. Yeah.
That's all right. We've already done that and it's going well. So thank you. I just was
great.
Okay.
And the other question that I have for you, of the CDFIs, do you have, and you don't have to mention their names, but are there native CDFIs that are in your program currently?
I'm not sure that any are actually signed up yet. We are talking with 2 right now, that it looks like they are going to get signed up here in the next week or 2.
And
Yeah, again, we just started, as you know, Pete, I think the first presentation did for you when we first were reaching out, trying to get the ball rolling on this,
Yeah.
was just about 2 months ago.
Yeah.
Yeah.
And what is the general turnaround time once an application for CDFI is submitted to you?
Oh, well, once everything is turned, once that documentation's turned in, I mean, it's, I don't know, a day or 2. I mean, it's it's like that.
Okay.
However, once you get approved, we do need to get you trained on the program and on using the GUS system. And we have all those trainings out there. Again, on that link library are all the trainings for originating loans in our system and for using the GUS automated writing system. So we'd have the person, whoever's going to be working the loans, whoever your underwriter is, they would have to take those trainings and they'd self-certify that they took all those trainings. And then they would get their login credentials so they could get access to GUS and start going. Now, once someone does those trainings too, and again, see, that's the nice thing about us being small, that you can get the personal touch. We're going to have you go through all those trainings that are recorded, get the base of everything, and then we are more than happy to, after that, sit down and do live trainings with you, answer all your questions you have after going through those things, go over parts that you still don't understand, whatever. We're willing, we do that all the time, actually, with our approved lenders. A lot of the bigger lenders, we do trainings with them once or twice a year just because they have staff turnover. So yeah, the personal touch doesn't go away. Yeah, you're not going to be left on your own just to do some recorded trainings and then figure it out. That's what my team in particular is here for.
And then we have a question. Can the attendees today get a copy of your PowerPoint?
Yeah, it's I don't know how to get that. Do you have the list of everyone, Pete?
Yeah.
Because of course okay.
Yeah.
Yeah, of course. Yeah, distribute to anybody.
Okay.
Yes.
Okay. And then is there a packet on the website to fill out and return?
Oh, to get signed up to be a lender?
Yeah.
Yes, that's out there on that link library site. But again, maybe even easier, instead of having to dig for it, my contact information here. Let me share the end of that. Oh, hold on, I closed out of that. I'm going to just put that up on the screen again. Just reach out to me, my team, and we are happy to get you connected with the compliance group, and they'll get you those documents directly to you.
Okay.
Let me just find the presentation. I don't know why I closed that. Were there any other questions while I pop that back up on the screen?
Andy, can we get you to jump on and ask your question directly? Good friend in sunny Arizona, Andy Gordon.
Thank you. Hey, David, Corwin, excellent presentation. I find it very encouraging about the potential here. I was just wondering, can you give us a sense of the total dollar range of single family loan guarantees that USDA has provided, let's say, cumulatively or on trust land, cumulatively or recently or planned for in the coming budget?
Well, okay, now as far as budget, with the guaranteed program, we really aren't capped so much. Yes, technically we are, I believe, at 24 billion, but then we're allowed to simply request an extension beyond that up to 30 million should we need to, or billion, should we need to. But there's not really a cap or anything. We don't run out of money. This program is budget neutral. That's why we have that 1% upfront fee, that 0.35 annual, and those can be adjusted as needed should we experience losses. So it makes the program budget neutral. So there's not going to be a running out of money type situation like with our direct program, which definitely has a cap.
Right.
So in loaning on trust lands, that's not a separate program. That comes out of the main pot of money we have to do our program. It's not a separate program.
Right.
So we can do trust loans all day long. Now, as far as how many we've done on our guaranteed side, we're not aware of any that have ever been done on trust land. On fee simple land on reservations, yes. But on trust land, no, which is why we're putting this focus on this year. We're realizing it's not happening, even though we allow it. So why isn't it happening? And that's what we're trying to tackle now.
Well, this is an impressive initiative for sure, and I think we want to definitely keep on this communication because we want to make a difference with that. And you have a fantastic resource here for construction lenders in particular, I think.
Great. Yes. We really think our construction program is. Oops, sorry. Can everybody see the program? See the presentation now? Okay, trying to get to the bottom.
Thank you,
So we
David.
have the contact information. There we go. Yeah, so yeah, we're really pleased with our single close construction, and it hasn't taken off as quickly as we thought it would, but there are several really of the big lenders around the country that have taken to it now and are really utilizing the program because, you know, I don't know how you beat that you get a loan guarantee put on before a shovel goes in the ground. You're covered.
And then Pamela, do you want to jump on and ask your question?
Sure. So so are you also going to then require the same lender, like the NMLS licensing through CDFIs and particular native CDFIs?
Require licensing?
Yeah. So like loan originations, most lenders are required to have NMLS certifications, multiple listing, the multiple.
Yeah.
Hey, Dave,
Go ahead, Joaquin, please.
Sorry. Jumping
No,
in.
go ahead.
That's somebody else's criteria. That's a great question, but that's not something that we chase after. The MLS numbers. That's somebody else's bailiwick, and you know, that's not something that we require at USDA. Does that make sense?
Yeah, totally does. Good to know.
And just so everyone knows, that was Joaquin Tremmels. That's my boss.
I guess another follow-up question that I would have would be, is it possible to get another like follow-up webinar with you and just taking us through step by step of a application, filling out the application for a native CDFI to become an approved lender?
Well, yes, we're happy to do that, but honestly, like I said, if any CDFIs are interested, please just reach out directly to us and we'll one-on-one, we'll handle it with you.
And Ted Bulow has his hand raised. Ted, do you want to ask your question?
Yeah, it's not really a question, but I wanted to stitch together a couple things, going back to Barbara's question about the direct program. So I'm Ted Bulow, I'm the tribal coordinator for rural development, and we see the 502 guarantee fitting into the menu of rural development programs. So, and this also gets to the question from Andy. Historically, about 1 out of 10 of our 502 direct loans to Native Americans, folks that self-report that they're Native American, just under 10% of those have been on tribal lands. And this is going back to about the year 2000. When it comes to our home repair programs, which is a grant and or a loan and or a grant loan combination, that's called the 504 program. About 1 out of 3 of those, just over 33% of those have been on tribal trust land when the borrower or the recipient is a Native American. To Andy's question and David's response, we think the 502 guaranteed program can be better utilized for tribal members, for Native Americans, both on and off trust land. And we need lenders that are motivated. And we don't know any more motivated lenders than the native CDFIs. So we're just reaching out to you, encouraging you to think about it, and want to underscore the willingness for flexibility if you are interested in using this program, because 0 means zero precedent. 0 means we haven't reviewed the particulars of the loans coming in from the folks that you serve, and we want to. So I encourage folks to take advantage of the openness and the willingness from David and Joaquin, and I'm excited about this. So I just wanted to thank David and Pete for hosting this as well.
And we have one more question from Becky Albert Breed. do they contact you directly, or is there someone specific in your area that they should reach out to?
No, contact us directly. Again, our program, our guaranteed program doesn't run through the state offices. The state offices and the local offices for USDA Rural Development still manage all the other programs that USDA does, that USDA Rural Development does in your areas. This single family housing guaranteed program, though, is now like one nationalized program. So although we might be spread out all over the country, we don't all work in DC. It is one team under one umbrella, because this program, the guaranteed program, is about, I think it's 55 to 60% of the loan dollars that all of USDA Rural Development uses between, I don't know, what is it, like 40 other programs that we do lending for in rural communities. So yes, reach out to us, reach out to myself, my team directly. Yep.
Okay.
No matter where you are.
And, one other question that I'd have for all the participants on the call, I don't know what states everybody is from, but I've heard of an exemption for nonprofits when it comes to home lending in their state that kind of skirts the NMLS requirement. Has anyone, or does anyone know that of their state that provides an exemption for nonprofits? Under most states are, to do home lending, you have to go by the banking regulations in the state, and some banking regulators, state regulators, have an exemption for nonprofits. Is anyone familiar with that? Nope. Okay. All right. No, I appreciate your time. I'm going to jump on the bandwagon here and reach out to you within the next week to 10 days so that I can beat the traffic that you might have generated from this call, and maybe
That's
be one
great.
of the first 3 here. So no, I'm excited and I appreciate your time. And does anybody have any last questions for David? Okay.
I see someone said about sending the contact information, and like Pete said, Pete's going to share my presentation, which has the contact information, share that with everybody from the call.
And what we'll do is we always do a little write-up on the presentation plus the slide deck, and then we're also going to send out to you the recorded version of it. So you'll have that for your records and be able to view it at a later time as well. Oh, one more question. Michelle, would you like to just jump on and ask your question?
Yes, we're teaching home buyer classes. Would you guys be willing to do a presentation for our classes? We do a 12-week home buyer readiness class for our clients here on Cheyenne River Indian Reservation. And if so, who can I contact?
Yes, contact me. That'll be someone from my team that would do it. Obviously, they'll have to do it virtually.
Yeah,
but yes, happy to.
Yep, we're on Zoom. We did have Roxy Woodring doing it for us, but I think she's in a different department now.
Gotcha. Yes, no, we can definitely help out with that. As far as if you were looking for more detailed information on the direct program, we can give some basics on that, but obviously someone from the direct team would have to be on that. We could work that out with you ahead of time. If that's something you wanted, maybe we can grab someone from that side.
Okay,
be willing to hop on with us.
All right, that sounds good. Thank you.
Absolutely.
Okay. Well, I thank you, David. I don't see any other questions, and I know I'll be in touch and be visiting with you and Ted here in the next week to 10 days. So I thank you for your time, and
Great.
it was it was really an amazing presentation. There's so much flexibility with this. This is what really surprised me.
Well, thank you. We always appreciate the opportunity to share.
Okay. All right. Thank you.